Good morning, everyone. Welcome to the TradeXchange weekend webinar. We are doing this one yet again remote. We want to wish everyone a happy, healthy, safe, prosperous 2023. We all hope you had a wonderful New Year's Eve. Keep in mind, members, markets are closed tomorrow on Monday in observance of New Year's. We're going to do this one very quick. Just a quick recap of last week and the year, and then going into what we're looking at this week. U.S. markets ended the year lower across the board. The Dow down 8.78%, S&P down 19.44%, and the Nasdaq down 33.1%. Global stocks lost around $18 trillion last year. The S&P 500 had its worst year since 2008. One area that we've spent a lot of time discussing, actually two areas, were the yield markets and oil. The 10-year yield ended at 3.88% from a level of 1.5% in 2021. Crude oil, from the headlines following the Ukraine-Russia war, we saw highs hit around $125. But if you take a step back and look at the end of the year, we saw crude oil end the year around $80. Keep in mind, though, members, that in 2021, crude oil ended the year at $75. So if you don't follow crude oil day to day, like we all do, and took a step back and looked at it on a year-over-year basis, you'd see crude oil only pop about $5 in 2022. Once again, everyone, we want to wish everyone a happy, healthy, prosperous 2023. As always, we do have your day off, I guess you can say, in observance of New Year's, which will be tomorrow. Markets are closed on Monday. And we are back to work and back to the grind with a very busy week on Tuesday morning. This week we have going through a list of the economic data-wise. We have construction spending on Tuesday, FOMC minutes, JOLTS job openings, and the ISM manufacturing on Wednesday. Fed speakers Bostic and Bullard are back, and the ADP employment report on Thursday, and the all-important employment report on Friday, which also includes on Friday the ISM non-manufacturing, factory orders, Fed speak from Barkin and Bostic, and headlines from the EU in regards to CPI, retail sales, and consumer confidence. So we do have a very busy week coming. We have Fed speakers back on the agenda, and hopefully we start to see volume coming back into these markets and volatility as well. So taking a look at your week ahead. Upcoming U.S. and world events. We do have some earnings this week on CAG and WBA. As always, members, Monday, as we mentioned, Monday, the U.S. markets are closed. On Tuesday, we are watching construction spending. We also have on the EU side, Germany CPI. Wednesday, FOMC minutes, JOLTS job openings, ISM manufacturing. China has the cakes and services PMI, and EU global composite PMI. Thursday, Fed speak back on play. Fed speaks Bostic and Bullard, the ADP employment report, and on Friday, a very, very busy day, starting off with your employment report. Then you have ISM non-manufacturing PMI, factory orders, Fed speak from Barkin and Bostic. On the EU side, we have the CPI, retail sales and consumer confidence, and Canada as well has their employment report. So we have a very busy week coming. We understand, the past few weeks have been very slow. News flow has been basically obsolete. It seems like we're starting off with a bang on this shortened week, as you can see. Company events, still not much on the agenda, as well as your top conferences. One thing we'll be watching, we do have the CES scheduled for this week. So if they have anything important, we'll be providing that in the news desk and Squawk. U.S. calendar, we went over before. As you can start seeing, we are starting to see Fed speak starting to pop back into our economic calendars. So it'll be interesting to see, following the recent headlines if there are any changes, thought processes that have been affected with the recent econ data, and then see if it does affect any commentary and thought processes on the Fed speak side. International calendar as well, pretty busy week. Earnings for the week, as we mentioned, on Thursday morning, we do have CAG and WBA. Fear and greed index continuing to be on the bearish side with the 37 on the fear side. Saw a small uptick from the previous close, but still that mindset is on the bearish sentiment. Weekly sector performance, we saw strength in financials this week. Interesting move in financials, I must say, with all other basic sectors in red. Financials, energy, and communication services saw a green end to the week. Industry comparisons to COVID, as we can see, still trading at these levels that we've been seeing. As we all know, not much action the past few weeks. So we could start seeing some volatility coming with the new year. Your 10-year Treasury constant maturity minus 2-year. We are seeing that weakness continuing to be below that zero threshold. What we wanted to look at here is every time we did see that drop, we do see a recession. Drop, we see a recession. Drop back below, we saw a recession. So we are awaiting, I guess you can say, a recession. The question that comes down to it is, how deep of a recession will we have? You talk of probabilities, year-to-date percent returns. The year ended with a lot of energy plays on the green side, heating oil at 37, up 37%. Your gasoline up 24%, nat gas up about 10%, crude oil up about 7%. So we did see energy take hold this year on a sector-wide look, but we are seeing a lot of strength in those areas. We did see strength as well in corn, up 14%, platinum up 12%, silver up 3.5%, and wheat and gold ended the year up flat to about 2%. Your AAII investor sentiment survey saw a big uptick this week on the bullish mindset and a drop on the bearish mindset. So we'll see if this has any effect going into 2023. As we all know, the headline, so goes January, so goes the year. We'll see what happens this time around. We do have a bullish shift a little bit, so it could see some interesting movements in these markets. Sector Outlook Weekly, as we mentioned, energy was the only sole survivor in green, up 59% year to date. All lower across the board, with communication services down 40% year to date. Not much on the outside calendars regarding IPO lockup expirations, expected IPOs, and the FDA calendar. Not much action at all. A quick look, members. We're going to do a quick peek at these charts, and then we'll end it up for the week. So we have gold. No changes to the chart. Gold continues to trade in that range with the high end resistance 1825 to 1850s. Ended the week at 1830. Still up above this trend line, but right around that resistance level. So we keep a close eye on gold. Your SPY, no changes to the chart. Another week of no action. The chart tells a story. We ended right by that 380s level again, but above support levels. We are seeing a short-term base being built. So we're going to be watching this closely going into 2023. NASDAQ, no changes to the chart as well. We mentioned last week that the 10.5 level is key for a directional move. We ended the week right by that level again at 10,466. So we'll continue to watch this level base being built here. Will we see an upside move, or will we see a retest of the 10,000 support? SPY daily on a moving average look, as well as your triple Qs and your IWMs. We're looking at your 10-year year daily as well on the moving average look. A little clearer look on the 10-year daily. No changes to the chart, members. The past few weeks, we kept mentioning how a base was being built at that 3.4, 3.6% level. And a break above 3.6, as well as a downward trend break, we could end the week stronger. And what did we do? We ended the week at 3.879%. We continue to watch this level as the 10-year yield is trading right to that 4% resistance. We'll watch closely to see the action this week. Diamonds on a daily moving average base. We are seeing a lot of these bases, as we call it, being built in a lot of charts. So typically, whenever you see something like this being built, as you saw back here and over here, you could see a directional move. So we are watching to see closely if we see an upside break or a downside break to the support levels. IWM weekly, no changes to the chart. Last week, we ended the week at 174.39. This week, 174.36. That's what we mean when there has been no action in markets for weeks. And another test of the 170 level. A clear test of 170 support, bounced, and basically ended the week exactly like last week. It's a very similar stick candle chart in regards to the IWMs. HYG daily on a moving average with trend line. Once that trend line broke, we did see that weakness. S&P 500, no changes to the chart. We mentioned this last week as well. It seems like a range is being built right here. Could see a 3,700 test if we break to the downside, or if we see an upside break to that 3,900, 4,000 key level support resistance level. The question comes down to it: do we break below or make a move higher? Time will tell. And we do have a very busy week coming up, so this could see a lot of change into next week's weekend report. VIX daily, still test, still hanging out here. Is it going to be a similar move to this, or are we going to see this and a drop to new support levels? Watching very closely on the VIX. Oil daily, we did add a short-term uptrend this week. We continue to trade in the 80s resistance levels as we ended the week at 80.51, right at that key resistance level. As you can see, these were no changes to these resistance levels, so it basically ended right at that level on oil. US dollar daily, no change to the chart. We continue to watch these range levels for a directional move as we have 104s on watch. We can see a test of that 102 level, which is back here. But keep in mind, members, with that slow volume week the past few weeks, we are waiting to see what action happens this week as volume starts coming into the markets. Bitcoin, not even going to waste our time on Bitcoin. No changes, no nothing. And the SMH daily on a moving average look. So, members, once again, we want to thank everyone for being a part of the TradeXchange team for 2022. A lot of changes coming in 2023 that we are very excited about. Once again, members, thank you. Happy New Year. Raise our glasses for a prosperous 2023. Enjoy the rest of the holiday weekend. We'll see you first thing Tuesday morning for the TradeXchange pre-market prep. Check the news desk all weekend long and tomorrow to get yourself ready for Tuesday's morning. Everyone, thank you. Enjoy. TradeXchange out.